Greetings and welcome to In the Loop Weekend Ag Talk, brought to you by Alphen Insurance Agency, the home of Policy Plus. Hope you've all had a good week. Let's jump over and see what the markets were doing on Friday afternoon. Both corn and wheat had a rough week in the trade. May corn finished out at 617 and a quarter, while December corn is at 557 and three quarters. May wheat finished out the week at 679 and a quarter. July wheat finished out at 690 even. May cotton finished up at 78.18, while December cotton finished at 80.25. May soybeans finished the week at 1507 even, and November soybeans finished out the week at 1357 and a half. When you insure with Alphen Insurance Agency, you get Policy Plus. If you're not a current customer, give one of our agents a call and let them tell you all about it. Looks like spring has sprung in eastern North Carolina. The word of the week this week is pollen. Yellow pollen is everywhere, but thankfully we're getting some much needed showers on Friday afternoon to hopefully wash some of this away and help put back some water in our groundwater before we get ready to plant here. Also had some cold temperatures come through the area this week, and hopefully there's been no damage to any of our fruit and vegetable crops so far this season. We do have quite a bit of news to cover this week when we're looking at U.S. Ag News. USDA WASDE report featured no major surprises this week. USDA reduced its projection for U.S. corn exports by 75 million bushels. This was a needed change, but was slightly more aggressive than what traders expected. The woes of U.S. corn export program are well documented. As expected, USDA's numbers were also more aggressive when they were talking about cuts to Argentinian corn and soybean estimates. One might ask, why is the corn market falling? Well, we've got a couple ideas here. One, demand is poor on corn. Export sales and shipments are still soft, and USDA will probably reduce the estimate again in future reports. And corn probably won the U.S. acreage battle when we looked at projected acres to be planted by farmers in most areas, especially in the Corn Belt states. Corn still pencils out better when you look at budgets. I don't know that we'll see many acres shift out there as most decisions have been made, but maybe here in the Carolinas there may be a shift depending on what things look like before we start to put seeds in the ground. When we look at wheat prices, they've also collapsed as well. U.S. wheat is overpriced, number one, especially when you compare it to some of the Russian wheat that's getting out in the market. Number two, optimism regarding a Black Sea grain drill. In a drought-stricken U.S. area, the wheat crop, horrendous crop ratings in a handful of states over out in the southern plains have done nothing to help prices. Reuters data indicates that Russian wheat is priced 18% below U.S. wheat on the export market, and this is not helping prices either. When we look at ethanol production, it improved marginally last week. Weekly output of just a little over 1 million barrels per day was 0.7% on the week, a high, but minus 1.8% versus same week last year. These are average to normal numbers for this time of year. Corn planting has begun, according to Successful Farmer magazine. Texas is getting things kicked off, and they're the only state reporting so far, but saying that they're 20% planted at this point. That's up 4% versus last year and about 7% above the 5-year average of acres planted at this time of year for the big state of Texas. Export sales were a mixed bag for the week. USDA reported net cancellations of 23,200 metric tons of soybeans during the week ending March 2nd, a marketing year low. Unknown destinations and Pakistan canceled most of these orders. Despite a bad week, soybean export sales are on pace to meet USDA projection, and corn sales are still lagging. Japan and South Korea have been our largest buyers so far. This was our best weekly corn total since late January. And it sounds like the Fed may be more aggressive with interest rate hikes. Fed Chairman Jerome Powell spoke at hearings on Capitol Hill this week. Powell told the Senate Banking Committee the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of rate hikes. We're looking at a reversal, really, of what we thought we were seeing to some extent. Nothing about the data suggests to me that we've tightened too much. The current Fed fund rate is 4.625, up sharply from 0.375% just a year ago. Traders have now discounted a 0.5% rate hike on March 23rd. Traders had expected a rate hike of only 0.25% prior to recent events in the market. When we look at world ag news, China imported a record volume of soybeans during January and February. Combined January and February imports totaled 16.7 million metric tons, according to Chinese customs data. Some would point to the reopening following a nearly 3 years of COVID lockdowns as a potential reason for the increase. Others might point to minor delays in soybean harvest in Brazil, which could have resulted in additional shipments from the U.S. March imports are likely to decline because Brazil is behind on shipments, according to one analyst on Reuters. Spring planting has begun in Ukraine. Reuters reports that farmers are eyeing negative operating margins across the board due to higher logistic cost and risk as a result of the war. Also, the UN is in discussions with Ukraine regarding the Black Sea grain deal. The Secretary General says they need to discuss the continuation of the grain deal initiative and all of its aspects as well as pertinent issues. Russia appears to be absent from the recent discussions. Moscow will need to sign off on any extensions of the grain deal. Argentinian crop estimates continue to be cut. The country's Rosario Grain Exchange pegged the soybean crop at 27 million metric tons, sharply down from 34.5 million metric tons previously. USDA's report this week is saying that it will be a 33 million metric ton crop this year. If confirmed, the soybean estimate would be the worst since 1999-2000 marketing year. The corn crop was pegged at 35 million metric tons versus 42.5 that were previously estimated. USDA's report this week is saying 40 million metric tons. They're saying that the main reason for this is historic drought in the region. And when we look into Brazil, Brazil's government released its monthly crop report this week. CONAB pegged the country's soybean crop at 151.42 million metric tons versus 152.89 previously. Despite the decline, the new estimate is reflective of a record crop. In additional news, Brazil's second largest ag lender said that the soybean crop would fall to 147 million metric tons as a result of drought in the south. The lender projects the crop in Rio Grande do Sul, the country's southernmost state, at 12 million metric tons versus the CONAB estimate of 15.2 million metric tons. This week, in something to consider, we will look at livestock risk protection for beef feeder cattle, or better known as LRP coverage. One may ask, with beef prices looking to be gaining throughout the rest of the year, why would one be looking at risk protection insurance in this type of market? To answer that question, one, to get educated on this type of coverage. Number two, to get your policy signed up so when you start seeing the market change, everything would be in place and you could pull the trigger and get covered quickly. Feeder cattle LRP is designed to insure against declining market prices. You may choose from a variety of coverage levels and insurance periods that match the time your feeder cattle would normally be marketed. You may also retain ownership with this type of policy. You may buy LRP feeder cattle throughout the year from an approved livestock insurance agent like Often Insurance Agency. Premium rates, coverage prices, and actual ending values are posted online daily on the RMA website. You may choose coverage prices ranging from 70 to 100% of expected ending values. At the end of the insurance period, if actual ending value is below the coverage price, you will be paid an indemnity for the difference between the coverage price and actual ending value. When you visit RMA's website, you can see LRP feeder cattle coverage prices, rates, actual ending values, and per hundredweight insurance cost. Actual ending values are based on a weighted average price from the Chicago Mercantile Exchange Group Feeder Cattle Index. Actual ending values are posted on RMA's website at the end of the insurance period. You submit a one-time application for LRP feeder cattle coverage. After the application is accepted, you can buy specific coverage endorsements throughout the year for up to 12,000 head of feeder cattle that are expected to weigh up to 1,000 pounds at the end of the period. The annual limit for LRP feeder cattle is 25,000 head per producer per year, and the year runs from July 1st to June 30th. The length of insurance coverage available for each endorsement is 13, 17, 21, 26, 30, 34, 39, 43, 47, or 52 weeks. Coverage is available for calves, steers, heifers, predominantly Brahman cattle, dairy cattle, and unborn calves. You can also choose from two weight ranges, from 100 to 599 pounds and from 600 to 1,000 pounds. If you would like to learn more about this type of coverage, give us a call. We'd be glad to run a quote for you, help explain this policy to you, get you comfortable with it, and get all the necessary paperwork in place so when you decided to take out specific coverage endorsements for your animals, we would have everything in place and be ready. I think this is a policy that can be very, very helpful to protecting your risk in the beef cattle industry, especially once we reach the peak of the high market that we're experiencing and that's projected between now and the end of the year. I think it's something, if you could learn about it, get comfortable with it, get the paperwork in place, when things turn, this could be a valuable tool of protecting interest at your farm or ranch. Well, folks, that wraps up another edition of In the Loop Weekend Ag Talk, brought to you by Often Insurance Agency. We hope you have a great weekend, and thanks for tuning in today. Remember, keep mental health a priority around your farm and around your home. Make time for yourself over the weekend. Make yourself available for others during the week so we can address mental health issues on the farm. Thanks again for tuning in. You guys have a great weekend, and thank you all for feeding and clothing America and the world. See you next time.